Good morning, everyone. So today we're going to continue with our accounting 1A. So in the previous session, we basically just looked at what is accounting, why do we record financial information, what is the purpose of financial information to the users and stuff like that. So that was more the background, the history, where did it come from, that you guys needed to know. And in that session, we said specific things you guys need to sort of focus on and be aware of is, for example, the difference between a financial accountant and management accountant. They always love to ask that. And then also be able to identify the users of a set of financials. Now, in your textbook, they've listed a number of users. So some of them are your investors, it can be your creditors, any lenders, it can be employees, trade unions, and there's a whole list of it. So those were the key ones that you need to know. And then we started touching on what the double entry accounting system is. Now today we're going to delve into more detail about what the double entry accounting system is, how it works, and we'll do some questions and examples to help you guys build your knowledge. Okay, so this slide is just to remind you guys what the different icons mean when you see it on the sides. Now the learning outcome specifically for learning unit 2, and if you want to open your textbooks, we are starting on page 22 in your textbooks. That's where learning unit 2 starts, which refers to your accounting equation double entry system. Now the learning unit specifically for this learning unit is you have to analyze transactions under the accounting equation. Now what that means is you need to go identify, we'll give you some transactions and you need to go tell me, is that item falling under the asset, liabilities, owner's equity category? Now we're going to explain those concepts shortly. Then you need to be able to define an asset. Now when we say define an asset, you need to be able to tell me what is the definition of an asset. So how would you explain it to your fellow students or to one of your friends outside of class? And then you have to be able to distinguish between what's a non-current asset and a current asset. Now we're going to talk about that later today, and the same for your liabilities. You need to be able to give me an explanation what a liability is, and then tell me how would you distinguish between what's non-current, what's current. Then you need to be able to explain what is meant by proprietary account, and then define income and expenses. So when you see the word define, it basically means explain. Then we'll discuss the profit motive of a business, and we're going to demonstrate how gross profit and net profit is calculated. Derived means calculated, and then explain and apply the rules of double entry accounting. Now, just to sort of recap, your double entry accounting, we said, is your debit and your credit side needs to be exactly the same. Now that principle you will also see flowing through when we do the accounting equation. In your accounting equation, whatever's on the left-hand side of the equation needs to agree to what's on the right-hand side of the equation. Okay, now let's quickly recap. One of the videos that you had for homework talked about the different elements of the financial statements. Now you can see there's 5 components. These are main components in a set of financials that we prepare for our users at the end of the day. Now the definitions for these you can find in your textbook. So let's start with an asset. The asset, based on page 24 in your textbook, an asset is something that has a present economic resource that is controlled by the business as a result of a past event. Now, if we look at that definition, the key things that you need to take out of that is it's a present economic resource. So what that means is I actually own that asset currently. So I can use it today if I need to. And then it's controlled by the business. Now that's very important. It's only an asset in your books if you control it. So when do I control something? I am able to determine what I'm going to use it for and when it will be used and where I will use it. So let's say, for example, you take your car that you drove to varsity with. If you own that car, you can determine where you want to drive to, when you want to drive there, and who can drive with you, who's allowed to drive your car. So that's something that you physically own. And then as a result of a past event, that past event is when you initially bought it or you traded it. So something happened previously that resulted in you acquiring that specific item. Okay, now we're going to look at a few examples of assets. As for example, land and buildings is seen as an asset, plants and machinery, equipment. Then you've got inventory, that's an asset. You've got debtors, you've got cash, you've got bank. Those are examples of an asset. Now, from those you can see it's something that you physically own. Now, liabilities on the other hand is something that you owe. So it's money I need to pay to someone else. Now, if you page in your textbooks to page 26, how they define a liability is they say liabilities are debts. They represent the business present obligation to transfer economic resources due to past events. So let's break it down. I've got a present obligation. So today I need to pay someone. I owe them money. Now that present obligation can either be because of a contract that we've concluded or an event that happened. So I acquired some goods from you and now I have to pay you money. Okay, so there's the contractual obligation, and sometimes we also have an obligation in a company due to past events or the perception that we've created. For example, bonuses that need to be paid out. That is also a type of obligation, even though it's not necessary in your contract. If a company has always paid out a 13th check, for example, in December, they have created an obligation or the expectation with employees that they will receive a 13th check. Okay, now economic resources, that is basically money or goods that I'm going to hand over to settle that debt. And then as a result of a past event, I either received goods previously or I received services and now I have to pay for those goods or services. Okay. Now the next one is owner's equity. Now owner's equity is another type of funding in your business, and that is generally where the owner of a business would push cash into the business itself, and that's called owner's equity. But it's not only just the capital that we've put into the business, it is also all the income and expenses that was generated during a financial period will also go to owner's equity. Because if the owner decides to close the business today, they will take their profit out as well. And that falls under owner's equity. Then revenues, that is basically all the income that this business has generated in a financial period. And then expenses are basically the stuff that we are paying for, which is not a liability. So that's your every day-to-day expenses. Examples of those are, for example, stationery. It can be salaries and wages, rent expense. It can be interest expense. There's a whole list of those. Now, all of this information is explained in a lot of detail on pages 23 to 37. Now, you'll see on the slide that they also just mentioned that revenue is in effect income, but for financial statement purposes, we call it revenue and not income. Now, before I move on, do you guys have any questions on the elements of a financial statement? You can either type, if you've got a question, just type it in the chat function for me, or you can just put on your mic and quickly ask me if there's anything I need to clarify. Okay, so I've just been asked to recap on owner's equity. Now, owner's equity is basically funding from the owners of a business. Okay, so we call that capital. That is where someone pushes capital into a business. Now, generally, it's you buy shares or you give a shareholder's loan to a company. That is seen as owner's equity. Now, you also have drawings, specifically more on your partnerships. That is where the owners or the partners take money out of the company, and that's called drawings. But then on top of that, any income and expenses, so the net of that is called your profits. So the difference between your revenue and your expenses is your profit is also included in owner's equity, as when you close a business, you're going to take the profits that you've generated over the years. You're also going to take that money, and that's why it goes to owner's equity. Now, a quick way to work out owner's equity if you do not have capital, you do not have drawings, you do not have income and expenses, is if you take your total assets, you deduct your total liabilities, so what I own less what I owe, and then I've got what actually the owners have at the end of the day. So that's an alternative way of calculating it as well. Okay, so let's move on. As we do the questions, these elements will make a bit more sense to you guys. Okay, now let's start with the building blocks. When we refer to building blocks in accounting, we are specifically referring to your assets, your liabilities, your owner's equity. Now, the reason we refer to that is because that is just like the double entry accounting system is the key components when we talk accounting. Now, before we go into more detail, what I want you guys to think about, do you think it is possible to calculate how much a person is worth? And I want you to motivate why or why not you think that way. So if you take yourself as an example, do you think you will be able to calculate how much you are worth today? Okay, so I'm just going to repeat the question. You guys can either post it in the chat function for me, or if you want, you can put on your mic and just explain to me what you think. So the question is, do you think it's possible to calculate how much a person is worth? And explain to me why or why not. So you can take yourself as an example if you like. Okay, do you guys understand the question? Do you just want to type in the chat function what you're thinking, or if you understand what you've been asked? Okay, so Walter thinks it's all the assets minus all the liabilities equal what you're worth. Mapeledi says, yes, you have to check the assets you already have and subtract the debts or liabilities you have. That will give you what you are worth. Okay, thank you guys. So that's correct. So when we talk about worth or net worth, that is in essence what you own less anything that you still owe. Okay, so that is your net worth. So what do you have in the bank after you would have paid all your liabilities? Now, in your cases, depending on whether you're working or not, you might own a car and you might have a student loan. Let's take that as an example. So your net worth would be whatever your car is worth. So let's say your car is worth 250,000 and your student loan currently is 100,000. Then your net worth would be 150,000. Now let me add in, you are working now. So you are a part-time student, but you work part-time somewhere else to earn a salary. How do you think that would affect your net worth? I'm just going to repeat it. If you become a salary earner as well, how do you think that will affect your net worth at the end of the day? Okay, so Helder says he thinks it's going to increase your net worth. Now that's correct. Because it's more money that goes into your bank, as a salary earner, your asset has increased, which means you earn more money at the end of the day, which means your net worth increased. Well done, guys. Okay, now let's have a look at how do we calculate celebrities' net worth. So their net worth is calculated slightly different to ours. So I've put the article link on there, but I'm just going to pop it up on the screen. So I'm just going to stop sharing this and then put the webpage on there. But if you want, you can also just quickly Google riches, the riches.com and then select net worth, and then you'll find Beyonce's on there. So let's have a chat. How would we actually calculate someone like Beyonce's net worth at the end of the day? Okay, so I'm just going to pop up the page, so just bear with me. Okay, so you should all be able to see the web page on your screen. Okay, now if we scroll, I'm going to scroll down to her earnings and financial data. Okay, so on this webpage, they will go into a lot of detail regarding what her earnings is as a celebrity each year. And they've gone back almost 10 years, actually more than 20 years worth of data on this. But let's just look at the last 3 years. So I'm just going to put the last 3 years on there. Okay, so her earnings for Beyonce basically is from any ticket sales that she's made for any tours, any record sales. So if she's done a recording, any sales from that, she would earn some money. And then you also see in 2013 she received a Mercedes-Benz, and they tell you what the market value is. And then in 2012 she's got a contract, which is an endorsement deal with Pepsi. Now, based on this information, what do you guys, how do you think we work out Beyonce's net worth at the end of the day? Or how do you think they've calculated her net worth for this article specifically? So I'm just going to repeat. How do you think, based on this article and what you can see on the screen, how do you think they've actually worked out Beyonce's net worth to say that she's one of the richest celebs in the world? You can either type your answer in the chat function or you are welcome to put on your mic and just speak to me. Okay, Anel says, I think they added all her assets and earnings, then subtracted her expenses. Walter says, all her asset and income minus all the liabilities. Okay, so you guys are on the right track. So based on the information they've got in this specific document, how they've actually calculated her net worth is they've any income that she received from record sales or ticket sales was included in her profit. Any assets that she received based on sponsorships or contracts, so endorsement contracts, would also form part of her asset pool. So that is something that she owns. And then if she has any liabilities that don't necessarily show any in here, then you would deduct that. And then expenses, normally they don't have expenses as such because they would generally be covered through your ticket sales or your record sales, or the endorsers would actually cover the expenses. So they would only pay them a net amount. So based on the information they've given you, it is in essence her income or any assets that and contracts that you receive from endorsements or any sales or whatever she's received. That would have been her net worth. So at the end of the day, similar calculation to you as a salary earner, whatever income you generate would have been added to your assets, and then we would take off your liabilities. Okay, so let's continue then. So I thought it was quite interesting just to figure out how do celebs continue their net worth. Okay, now based on the slide on the screen, you will see I've put the accounting equation here on the right hand side, which is your assets equals your equity plus your liabilities. Now the reason this equation looks like this on this side is assets is everything that you what? So an asset is something that you, what's the word that's missing? Okay, Venice, Michaela, it's own. Yes, so an asset is something that you own. Equity and liabilities, on the other hand, is funds that is put into a business to fund these assets that we own, so to acquire them. Now, equity is generally your owners of a business, how they fund it, whereas liabilities are generally your third parties funds, and that is money that we, what's the missing word? So liabilities is money that we owe. That's correct. So liabilities is always something that we own. Okay, now based on this equation, how would you calculate the net worth? So if you take the equation on the board, how would you adjust that equation to work out the net worth for me at the end of the day? Okay, Tumelo says it's assets less liabilities is your net worth. Walter says your equity equals assets less liabilities. Yes. So you guys are correct. Our equity is our net worth. Now to get to it's basic maths. So if we want equity on the one side, we need to move liabilities to the asset side. Now remember, when you move a positive item across the equal sign to the other side of the equation, that sign turns to a negative. And that's how the guys got to assets less liabilities equal equities. Okay, now we've already discussed what an asset is, but who can tell me, just in basic layman terms, what is an asset again? We've already discussed it, but who can just tell me, based on what we said, how would you explain what an asset is? Okay, so Bernice says it's things that you own. That's correct. Thanks, Michaela. Okay, now we know what an asset is. Basically something you own. Now, in our financial statement, we go distinguish between a non-current asset and a current asset. Now, there's one specific thing you look at to determine whether it's non-current or current. You can tell me, how do I actually know if it's non-current or current in my financial statements? What is the general rule? Okay, so Walter says current assets can be converted into cash within a year. Okay, yes, Walter. Anyone else that wants to take a stab at it? So is there anyone else that has a different way of how you determine what's the difference between current and non-current? Okay, so the basic rule, to get back to it. So what Walter said is absolutely correct. But to help you, yes, so non-current are your long-term assets. That's correct. So how do we know if it's long-term? Now, the basic rule in accounting, anything that you will receive in cash format within a 12-month period, so that's a year, is seen as current. Anything that will take more than 12 months is seen as your long-term asset, which means I will only receive that cash in the future. And that's how we distinguish between current and non-current. And the same applies to your liabilities as well. What is the basic, when we talk liabilities, what is the basic thing that you need to remember? How would you explain it? It is something that you just want to see if you guys are listening. Yes, it's something that you owe. That's excellent, guys. Okay, now the last question is, what are the components of the accounting equation? Well, I've basically given it away by putting that picture up there for you. So remember, the accounting equation has three components: assets, owner's equity, liabilities. Those are the three. Now, when you get this in a test, they will not necessarily tell you assets equals equity plus liabilities. You need to know this. So they will only give you the columns and you will have to just fill in the equal or the plus or minus sign at the top of the page to help you balance the equation. Okay, so like I said, accounting equation, just like the double entry system, the assets, so whatever is the total assets, need to equal what is the total equity plus total liabilities. So if assets are, for example, 100 and equity is 60, then our liabilities need to be 40 for that transaction or equation to balance at the end of the day. So that is something that a lot of students struggle with, is to balance our accounting equation. And the reason for it is there's two reasons. Either they've put it the incorrect sign in the equation, so they've either increased it when it should have decreased or vice versa. So they understood it needs to increase, but instead of making it a positive, for example, if it's an asset, they made it a negative. And then what they sometimes do is they put it under the incorrect element of the accounting equation, which then results in that equation not balancing. Now, if you remember to just look at each line item balances, then you would pick up that you've made a mistake and you can then go correct it. Okay, so that's just something to make a mental note about, is this is something a lot of students struggle with, and the main reasons are symbols is incorrect or you've put it in the incorrect classification. Okay, now this is just to summarize what net worth is. So it's your assets less your liabilities is your net worth, which is your equity. Okay, now let's do a basic example just to make sure you guys understand this concept. So I told you Tata owns a house and that house is worth 2 million rand. Tata took out a mortgage loan against that house of 750,000, and he also has a credit card balance of 15,000. How much is Tata's net worth? So how would you calculate it? You can just type your answer in the chat function for me. Okay, so I'm just going to repeat the question. How much is Tatu's net worth? Based on the information on the screen, what is Tatu's net worth if you take his information? Okay, so Walter says we take the 2 million, which is his house. We deduct the mortgage loan of 750, and then we deduct the credit card balance of 15,000 to get to a 1.235 million. Okay, so that is correct. That is exactly how you work it out. Okay, now Benice, I see you've added the 750 and the 15,000. So I'm glad you did it that way. What I want you guys to do when you do a test is exactly like Walter did it. Go split it up between the different components. The reason for that is, let's say that 15,000 was actually an asset and now you've added it onto the 750. Then you would lose 2 marks, whereas if you separated them, you would have earned 1 mark. And then you would have lost the mark for the component that's incorrect. Okay, so that's why I want you guys to always show me your calculations. The reason for that is if you make a mistake, then it's okay. I can still mark the principles that you follow to get to your answer and allocate the marks for the correct components. So then instead of losing all the marks, you will only lose a portion of the marks, and that will help you get closer to your 50% at the end of the day. So that's all we're working towards, is how to get the maximum number of marks in the minimum amount of time. By showing your calculation, you can ensure that you actually get the marks, even if you made a mistake somewhere. Because when you're stressed and you're under pressure, you sometimes make a calculation error, a transposition error, or you accidentally write the wrong symbol, which then gives you the incorrect answer, but you've actually followed the principles correctly. Okay, so that's just something that I want you guys to be aware of. Okay, who can tell me a mortgage loan? Is it a current or a non-current liability? Okay, so if we think about a mortgage loan, is it a current or a non-current liability? Okay, so I see all of you say it's non-current. Now, you are halfway correct. A mortgage loan is actually a portion will be current, a portion will be non-current. Now, why do I say that? Remember, when you pay your bank, you will have to pay installments. It's generally monthly installments that they calculate based over 20 years. Now, we said something is non-current if we're going to receive it or we settle it within a 12-month period. So now, in that first 12 months, I'm going to settle a portion of that mortgage loan, which makes the first 12 months current, and then anything over 12 months is non-current. So just make a note there on your piece of paper. When you see long-term liabilities or assets, you need to be very careful and read the information if there's any indication that something might be current. Because then when we do these calculations, you need to go split the current and the non-current component. And the question we're going to do today, we'll recap that specific thing again and then just show you how it works. But just for now, make a mental note to remember that. Okay, so let's do individual activity 2.4. It's on page 28 of your textbooks. Now, what I want you to do is I'm going to put up the Excel with the account names and the account numbers for those guys that might not have a textbook as yet, so that you can do the question. So we're going to start with part 1. So part 1 is to calculate the total of the non-current assets, total current assets, total of non-current liabilities, total current liabilities, and the owner's equity or owner's wealth, which is equity. And then define the following concepts. So then they ask for definitions specifically. So we're just going to start now with working out non-current, current assets, and non-current and current liabilities and the equity components. Now what I want you to do is, so that we can get through this a little quicker, in your textbooks or on a piece of paper, just jot down non-current, then the amounts that it relates to, and same for current and liabilities to work out what is the total balance. And then I'm going to ask you guys to give me feedback how you calculated those amounts. Okay, so I'm going to stop sharing this screen and put up the Excel for the guys that do not have a textbook at the moment, or let's quickly see where my Excel document is. Okay, can you guys see the Excel documents on your screens? Okay, excellent. Okay, so on the left-hand side, I've just listed the accounts as it is in the textbook. So these were the asset and liabilities as appeared in the books of Kiara Enterprises on 28 Feb 2020.7, so the last day of the financial period. And now they've asked you to work out the non-current assets, total current assets, non-current liabilities. So this is what you are required to calculate. So I'm going to give you guys a few minutes to work through this and work out how you would actually work out that amount. If you've got any questions, you're welcome to just type them in the chat function and I'll answer them as you guys work through the question. And then we're going to do a feedback session to show you guys how to actually work out these amounts. Okay, so you should have been able to get through the content or the information up there and sort of decide what needs to be under current assets, non-current assets. So let's now work through this question and then answer what was required. Okay, so based on the column on the left-hand side, which of these accounts have you guys identified as non-current assets? So which accounts do you think are non-current? So just to recap, non-current is something where you would receive income or you would use it for more than 12 months. Okay, so Michaela says land and buildings. Okay, so land and buildings, let's highlight that green. Okay, then Mapaledi says equipment, and Anel says, Anele, sorry, says vehicles. Okay, so we've got 3 items which we believe is non-current assets. Now, if you add those 3 together, you should have received a total of 700,000. Now, when you do the question, you have different ways of answering it in a test. Okay, so you can either go write it down, each of these items together, and then total it to say our total non-current assets equal 700,000. So you can either do it that way, or alternatively, you can show it as I've got 120,000 plus 180,000 plus 400,000. So you can either do it in brackets, or you can do it as I've done here at the bottom, where you show the different account names. If you do it in brackets, just remember to indicate what you are busy calculating. So right there, I'm busy calculating total non-current assets. Don't just write numbers there, because then I don't know what you're busy working out. So you need to lead the markers at the end of the day. What are you busy working out, so that we at least can follow? Because when we mark this at 2 in the morning, I might not be that inclined to give the marks if I have to struggle to figure out what's going on. So if you make it easier for the markers, the chance that they give you the marks easier is generally very good. Okay, so let's look at what is now the current asset. So if we've identified those 3 as non-current, which ones do you think is current? Okay, so Tumelo says data's control is current. Okay, so let's make this one orange. Trading inventory. Okay, so trading inventory, same thing. Trading stock is also a different name for trading inventory. Okay, is there anything else that you guys think might be a current asset here? Okay, cash float. Okay, Bernice said number 4, which is data's control. Number 5, which is petty cash. Number 11, which is cash flows. Number 12 is trading inventory. Okay, so those are the 4 you've identified. Now let's quickly copy and paste them here at the bottom. Okay, so if we add all of that together, our total current assets are 144,000. Okay, so alternatively, you could have done it like in brackets. So yeah, I've just put the different components here, which is similar to the brackets. So you can do either or of the 2 to get to the amount. Okay, so now we've done your non-current assets, your current assets. So you can tell me which ones are non-current liabilities. Okay, so non-current mortgage loans, okay. Is there anything else that you think is non-current? 10 and 6. Okay, so 6 is bank unfavorable. Okay, and number 10 is the mortgage loan. Okay, so Bernice, when we talk about a bank unfavorable, now, firstly, let's see what unfavorable means. Unfavorable is my bank balance is not looking that pretty. Now, when our bank balance is not looking pretty, it means I owe money. So unfavorable is it's not for my benefit. I physically owe someone else money. Now, normally our bank balance works. If it's unfavorable, it is like an overdraft account and you will repay it within a 12-month period. So it's a short-term debt. And for that reason, bank unfavorable is a current liability in this case and not a non-current. Okay, so then Nomatwema says loan from Plus Man's Bank. Okay, is there anything in this question that indicates that this loan, that a component is supposed to be current and non-current? Okay, so we've been told that only 100,000 should be non-current. Okay, and why do you guys think that? What in this question gave you that idea that a portion would not be seen as non-current? What information did they give you to give you an indication that that full 124,000 is not non-current? Okay, yes, tomato. So the 24,000 is redeemable. When they say it's redeemable, it is payable by the 28th of February 2028, which was within 12 months. So when we work out our non-current assets here, we are non-current liabilities. We are going to take this 124,000, but we are going to deduct the 24, which is actually current, which changes this to 100,000. And then when you add all of that together, you get 350. Just going to do that so you can see here. So that is total non-current liabilities. Okay, so that is how we got to that. Okay, so then our current liabilities is the remaining items. So I've just put the 24,000 here. So this one is actually that, there's that, which is the 100,000. Let me just uncolor that one. Okay, so that is our non-current one is the yellow, which gives you 56,000. So if you add those, you get to 56. And then how would you work out the equity? So that's the last component. How did we say we calculate equity again? What's the equation? Okay, Rafilwe, that's correct. Assets less liabilities. So we add our total non-current and current assets less the liabilities. to get to equity of 338. Okay, so it's the sum of the two assets less the sum of the two liabilities. Okay, so I see we ran over time, so we're going to take a break now. After the break, we need to elect a class representative. So if you guys want to put your name up for class rep, you are welcome just to type, just let me know in the chat function. Then I'll do a poll function where people can then vote independently for who they want. Or would you guys prefer us doing it in class next week, Tuesday, so that you guys can at least see and meet one another before we do this election? Okay, Nankanta, the total for total current liabilities. Okay, so how we got to the total current liability, non-current liabilities, we took the 250, which came straight out of the total for current liabilities. Okay, so the total for current liabilities, I took the 2000, which is the unfavorable bank balance. So that's a bank overdraft. I took the 30,000 for the creditors control, and I took the 24,000 for the current portion of our loan to Plumans Bank. So that portion that's redeemable here within the next 12 months. And that's how you got to the 56,000. Okay, so we'll then leave the class rep over for class next week. So if you want to be a class rep, then you can just let me know and then we can vote next week. Okay, so we'll take a 10-minute break. So 11:05, we'll start again.